Joining us now with her analysis of market activity at midday is Cremen from AdviceWorx. Caroline, hi, good to chat to you on Business Lunch. Good to have you with us. You would have seen there the JSE doing very well today. It was down yesterday, but gaining 1% as I've just read now. And of course, gold on the charge once again.
Yeah, so normally when you see the dollar is so weak against the rand, or the rand is strong against the dollar, we're down because you have your NAS passes and things driving us down. But really, it has been the charge of not only the gold shares but the platinum shares as well that has really pushed the market. You're seeing all of those gold stocks, up quite healthily from percentage point of view, and I think that's on the back of the fact that in the last week, you've seen a lot of investment houses really just upping their target prices for gold towards the end of the year. I think my mind boggled at the end of last year when I saw 6,000 to the dollar expected by the end of 2026, but now I'm starting to see 7,000 and beyond. So yeah, just sure. Gold.
Gold, but also silver as well. And this is the one that's not been noticed at the moment. That silver price is just going up and up and up.
Yeah, so there's a couple of reasons for that, I think. First of all, it's seen as a cheaper entry as a store of value. So there's that. The market has been in a bit of a deficit for a while. Also, countries, they've been looking at gold and platinum as stores of value. Now they're increasingly starting to actually nominate silver as a potential option as well. But then there's also a structural thing. So silver has tended to play, as do most commodities, in the futures market. And what we saw in 2026, well, the first few weeks of 2026, when those futures started to roll, people were actually asking for physical delivery as opposed to just rolling the futures, which is quite significant. And at one stage, the US Mint actually stopped allowing people to actually get physical silver coins because they just could not source the physical silver.
Wow.
So it's a very, very strange market at this point.
Sure. That's very interesting. All right, the big story today, the US Fed and interest rates. Jerome Powell, he's on his way out, but he's got a big decision to take. Caroline, where do you see things going?
Look, I think they'll hold steady. I think the inflation print is not yet healthy enough for them to actually reduce interest rates, although tentatively, the signs are there's still going to be 2 reductions this year. Now, I think what people be looking into, I think more is the politics behind this decision, right? So he's out at the end of May, but how will people be aligning themselves, to Donald Trump's keen little eye? So what is the commentary amongst the Fed chiefs in the various regions? Are they pro-rate cut? How dovish or hawkish are they going to be? It's just going to be interesting from a political point of view. Do they want to, protect themselves from Donald Trump, or are they just going to kind of stay the course?
Yeah, well,
yeah. And I also think just his take on inflation as well is going to be quite interesting because it's definitely not heading towards the levels that they expected. And I'm probably not going to go that way if you see the dollar devalue continually either.
Yeah, and that's what's been happening. All right, our very own interest rates at 3:10 on a Thursday. Lesotho Kganyago will give us the good news or the bad news. Do you think he's going to play it safe this time?
So it depends what you mean on playing it safe. I mean, I kind of say I debate in the office that I don't think he'll change it, which means he probably will. But I think that they've been pulled in 2 different directions. Number one is that they've changed the inflation target, so that would probably lead yourself to actually keeping it steady at this point. On the other hand, we've seen inflation, especially because of the strong rand, kind of be relatively moderate, and that would lead one to believe that he can actually cut at this one. So I think it's a bit of a toss-up at this point. Just because I had a bet in the office, I'm sure he's going to cut.
It always happens that way. It really does. All right, Mr. Price, Q3 sales. I mean, their sales are up and up. Good news for Mr. Price.
Yeah, I wasn't wowed by the performance. I think it was kind of in line of expectations. The retail sales, it's 2.6% up. It wasn't great. I think the online was okay, 3.5%. However, you did see margins decline, and I get the feeling with all of these clothing retailers that your Sheins and your Temus are taking a lot away, especially in that type of market. So yeah, They were nothing burgers. I mean, their guidance for January is about 4.2%. It's, that's nothing to get excited about. It's nothing to actually make an investment case, especially now that they're also like looking offshore,
Yeah,
very worryingly, and probably overpaying for an asset as well.
yeah.
So I think the only part of their business that actually was doing okay was the cellular part, So maybe they should just sell cell phones in their time.
Yeah, the
And the
devil's
market
in
will
the
be happy.
detail. Yeah, devil's in the
Yeah.
detail. Right, let's go back to the US. And I mean, US earnings, big tech companies, it's Microsoft, it's Meta. In the Netherlands, it's ASML as well. What are you seeing there? I mean, those big updates drive the markets.
Well, I think they're definitely company specific. So Microsoft and Meta are still coming. I think they're coming at the close of US business today. So I think you're going to want to see that Microsoft continue cloud and enterprise. From Meta, it's going to be interesting because they, of course, laid off a lot of their workers that were involved with the metaverse. So, and they were doing that in favor of the AI growth. So let's see, are they growing the artificial intelligence part of the business? And then, of course, always, it's a bellwether almost for the US economy and the global economy. How is the advertising spend? So you want to look at it from that point of view. ASML has actually come out. It was good. It always is. ASML never, people expect it to be exciting because it's like a tech company. It's not really that exciting. The bookings are up 144% quarter on quarter, which is great. But the Q4 sales, I think, up 5%, which is actually not bad. And you're dealing with a very, very structurally volatile market. So I think they beat revenue. But I think very interesting for me, for the first time I've seen for ASML that they're actually cutting 4% of their workforce.
Okay.
Which, you can look at it one way or another. So they're seeing some issues in the future, or they're just trying to become lean and mean.
Yeah, what's the truth there with ASML? Right, Caroline, your stock pick, what are you looking at today?
Okay, well, I'm going to look at looking at Netflix, and it's really a trading thing. If you've looked at Netflix and not just looked at Netflix shows, but actually looked at the share price, it's down 9% in this last month, down 12% in a year. There are a few misses from earnings, mainly related to tax issues, but of course there's also concern in the market about the price, now the cash price that they're paying for Warner Brothers. Are they going to overpay for that? I think this is, it's a solid company. Its revenue growth is 18%. It's growing in all the regions. Its advertising is growing. It's putting more live events, more podcasts, more sports on there. And its operating margin on nearly 30%. So you're never going to get this one cheap. It's probably I think it's fairly valued at this point. And if you ever wanted to purchase this, is probably the right time to do that. And then just hope that they do not overpay for Warner Brothers.
Yeah, that big deal coming. What's going to happen? Caroline, thank you very much. Good to chat to you on Business Lunch. I do appreciate you taking the time. That was Caroline Cremen from AdviceWorx.